Hello, crypto enthusiasts. Welcome back to Digital Assets Unfiltered, where we dissect the latest happenings in the world of cryptocurrencies. Today, we're diving into the curious case of Jamie Dimon, the CEO of JP Morgan, and his recent hypocritical involvement with BlackRock's Bitcoin ETF application. Crypto experts have wasted no time in exposing the double standards of JP Morgan.
Can you explain why crypto is such an attractive financial tool for terrorists, drug traffickers, and rogue nations?
I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have been built up over many years, know your customers, sanctions, OFAC, they can get bypass all of that. If I was the government, I'd close it down.
CEO Jamie Dimon after being mentioned in BlackRock's updated Bitcoin ETF filing on December 29th. All Jamie Dimon does is publicly use verbal diarrhea about crypto whenever he gets the chance. It seems like money laundering, tax evasion, criminal involvement, and even drug trafficking might be part of their repertoire too, remarked passionate crypto advocate on X. Even John Deaton had something to say on X to Elizabeth Warren and JP Morgan after this hypocrisy. During a recent hearing held by the United States Senate Banking Committee to discuss the supervision of Wall Street firms, Dimon, the CEO of JP Morgan, made a bold statement. He expressed his belief that if he had the power in government, he would completely ban cryptocurrencies, stating that Bitcoin and other digital currencies are primarily utilized for criminal activities. This raised a valid question from a user named Sunny Poe on X, who wondered how JP Morgan could take such a stance with the Bitcoin ETF filing, after previously informing Congress and Elizabeth Warren about Bitcoin only being used for crime purposes. Despite being big fat hypocrites when it comes to crypto, JP Morgan recently launched its own crypto coin called JPM Coin. JPM Coin is a stable coin pegged to the US dollar that's used to transfer funds cross-border between clients. JP Morgan has also developed Onyx, a blockchain-based platform for payments. And guess what? BlackRock is one of the clients benefiting from this innovative solution. But the hypocrisy does not stop there. JP Morgan has been exploring blockchain technology for years and recently tested tokenized portfolios on the Avalanche blockchain. Those tests allowed them to automate a significant amount of the steps involved in the portfolio management process, including subscriptions, redemptions, rebalancing, and more. In April 2021, the bank played a significant role in supporting Consensys, an Ethereum infrastructure firm, by contributing to a whopping $65 million funding round. What does all this mean? Other than the hypocritical obvious, in the realm of finance, the temptation of making profits has consistently overshadowed ethical considerations. Even the largest U.S. bank, along with other established players in traditional finance, could not overlook the overwhelming frenzy surrounding Bitcoin. Coinbase CEO stated, "It's actually strange because although Jamie Dimon's comments were a bit perplexing, internally at JP Morgan, they're actually advancing several projects working on blockchain and crypto technology. So they are such a large organization. I think sometimes the left hand doesn't know what the right hand is doing." JP Morgan and the Bitcoin ETF paradox. JP Morgan's foray into the world of cryptocurrencies, especially its involvement in BlackRock's Bitcoin ETF, highlights a fascinating contradiction within the financial industry. Despite Jamie Dimon's public disapproval of Bitcoin, branding it as a tool for illicit activities, his bank's actions indicate a calculated acceptance of the very asset he criticized. This paradox not only underscores the intricate dynamics between traditional banks and emerging digital currencies, but also underscores the increasing impact of crypto in reshaping conventional financial norms and practices. Truth is, JP Morgan's participation in the Bitcoin ETF highlights a shifting relationship between conventional financial institutions and the world of cryptocurrencies. Despite Jamie Dimon's past criticisms, the enticing potential for future profits in the crypto realm appears to have influenced the bank's perspective. This significant development may indicate a wider trend of traditional financial players embracing cryptocurrencies, ultimately reshaping the future of finance. Jane Street emerges as broker of choice for Bitcoin ETF issuers. Jane Street Capital, the firm where FTX's Sam Bankman-Fried honed his trading skills, has emerged as the go-to broker-dealer for proposed exchange-traded funds that focus on Bitcoin investments. Both Fidelity and WisdomTree have designated Jane Street Capital as their authorized participant, which means they are entrusted with the crucial task of managing the flow of cash in and out of these ETFs. As authorized participants, broker-dealers play a pivotal role in creating and redeeming baskets of shares within the fund, as well as facilitating cash transfers with the fund's administrator. While obtaining authorized participant agreements is typically not a challenge for ETF issuers, there were concerns among industry experts that Bitcoin funds might face more obstacles due to the relative novelty of cryptocurrencies as an asset class. Based on everything we know at this point, BlackRock is the first issuer to complete all the SEC's requirements in order to be considered for inclusion in the first wave of spot Bitcoin ETF approvals. Bitwise this week has offered a $200 million seed fund, which is likely to provide substantial support in the initial stages of the ETF race. This substantial investment surpasses BlackRock's known seed capital of $10 million. What is seed funding for and why is it needed? Seed capital constitutes the initial funding essential for the launch of an ETF, enabling it to be accessible to investors. This financial resource also helps in supporting the creation of units that form the foundation of the ETF, facilitating the offering and trading of shares in the open market. While traditional sources of seed capital have predominantly been banks and broker-dealers, several ETFs have also utilized self-seeding strategies in the past. It has been speculated that the introduction of spot ETFs from traditional financial firms like BlackRock and Fidelity will result in a massive influx of funds into Bitcoin. However, JP Morgan disagrees with this optimistic view. JP Morgan argues that the weak demand for existing spot Bitcoin ETFs in Europe and Canada is evidence that these investment vehicles may struggle to gain significant traction in the United States. Instead of attracting new capital, spot ETFs are more likely to draw funds away from existing Bitcoin-backed vehicles, such as the Grayscale Bitcoin Trust, Bitcoin Futures ETFs, or Bitcoin mining companies. The bank further suggests that if the Grayscale Bitcoin Trust, which is currently the largest Bitcoin fund in the world, is allowed to transition into a spot ETF, existing investors may choose to cash out and withdraw up to $2.7 billion from the exchange-traded fund. This could potentially have a significant impact on Bitcoin prices, according to the report. When we read things like this, we know it is just more verbal diarrhea to make you think in fear when it comes to crypto. This is nothing new, and it is the norm these days, unfortunately. But in the end, it's you who needs to learn how to read between the lines. However you view this FUD that Jamie Dimon puts out all the time to manipulate the market, the cryptocurrency market is witnessing a significant shift towards mainstream acceptance and institutionalization, thanks to the active participation of major financial players such as Grayscale, Valkyrie, and BlackRock, just to name a few. Their involvement in products like Bitcoin ETFs highlights the growing recognition of digital assets. This positive trend is set to continue, as Goldman Sachs head of digital assets foresees substantial growth and widespread adoption in the digital asset market by 2024. According to a report by Bitwise, the Global Financial Markets Association predicts a remarkable surge in the value of real-world assets tokenized on blockchains. By 2030, this value is projected to skyrocket from $5.5 billion to a staggering $16 trillion. In conclusion, Jamie Dimon's involvement in a Bitcoin ETF application has stirred the crypto waters. These companies will keep doing whatever they can to convince you to sell so they can swoop up more for themselves. Do not fall for it. If you found this exploration intriguing, don't forget to hit the like button, share your thoughts in the comments, and subscribe.